Morning, everybody. Thanks very much, Adrian. A very bright and sunny, but very cold morning. As you know, everybody, we've had the daylight savings change. Just before we get on to the news, etc., please let's just open up our Forex factory calendar with the calendar for the week, which we'll be discussing. Good morning, Susan. Stuart, hi there. Hello. Hi, David. Just to make sure when you're looking at this calendar, we're going to get onto it in a second, please make sure that the time is correct. You'll notice that this time is incorrect. Morning, Peter. Yeah, hi, Peter. This is actually Jerry. Adrian's just handed over to me now. Please make sure that the calendar shows 8:32. This is showing 7:32. You need to put daylight saving time on. If you click on DST on and then save changes, that'll now save the time to 8:32. So now, when you look at your calendar, it'll have the correct times for all the releases. Okay, news last week. It was a little bit of a pullback time last week. We had some fairly soft data during the week. The housing market data on Friday that we discussed on Thursday, that was pretty soft. I can actually show you the previous. Probably I may not be able to show you the previous week. Actually, yeah, let's just see. If I click on here, so here we can just see. It was last Friday, the 23rd. So you can see the housing data that came out. New home sales were weaker than expected, 313,000 versus 326, following on from 318 the previous month, and that was actually revised down from 321. So fairly soft data in the US, which, adding to the sort of growth concerns that we saw midweek, put a bit of a dampener on the market. But really, equity markets did not have that bad a week, really. Most of the markets are sort of consolidating sort of below these recent highs. And I think the thing that actually helped the markets on Friday, certainly in the US, was a rally in commodity markets, in crude, in gold. So that helped the market stabilize in the US. So all in all, although we had a bit of a setback, down about 1% on the Dow, a little bit less on the FTSE, the markets, as I say, are maintaining their recent strength. However, this rally that we've seen is subject to sort of a few wobbles. There are a number of factors that have been called into question just recently. Certainly, we had the PMI data in Europe was particularly weak last week, which is a big drag on in Europe. But obviously, the usual story with the Eurozone. I think we did see a bit of a wobble in the peripheral bond markets as well, with Spanish and Italian bond yields moving higher. I think then investors aren't particularly convinced governments will be able to follow through these rather tough austerity measures, and you continue to see sporadic demonstrations, etc., against these very, very tough austerity measures that will continue to bite, really. Other than that, there really is not a lot of news out last week to discuss any further. We believe that the risk-on rally will probably resume. I don't think it's right to be calling a top in the market at the moment, but certainly we did see a rally in the core European bonds, the likes of the Bund, the likes of the UK gilt even, notwithstanding the budget implications from last Wednesday, and also treasuries in the States. Other than that, the US data on Friday obviously was a little bit of a setback for the dollar. That's why you saw the euro rally. But I think we seem to be pretty much hemmed in. Let's just take a quick look at the euro here. I think we're pretty much still hemmed in by this 32.80 level. Yeah, if you look at this 240-minute chart, this sort of 75.80 level is definitely holding the markets in check for the time being, and I think that's probably a fair reflection of where we are. We're rather hemmed in by recent positive news in the US, less positive news in Europe, but with a slight flip in that on Friday. And so that's really it for the time being. Thanks very much for listening. Good luck this week with the markets.